President Donald Trump plans to nominate current Fed Governor Jerome Powell to the top job at the U.S. Central Bank. 3 people familiar with that decision told Bloomberg that Trump is likely to make that announcement tonight. And here's Bloomberg's Kathleen Hayes with more details on that.
Another in a long line of reports, I think, that give us solid information on what Donald Trump, where he was heading, and now what he apparently has decided. No surprise, because he's been telling Bloomberg and others that he's been leaning towards Jay Powell. At least his staff has been telling us this. Yellen's term, Janet Yellen, the chair for nearly 4 years now, her term is up February 3rd. And I think the question now everyone's asking, okay, so who is Jay Powell? Does he have the right stuff? So let's look and remind ourselves again just who he is and what he has done. Because he's studied law. He's not an economist, but he went right into investment banking once he got his law degree at Princeton, Georgetown Law. Dillon Reed, Bankers Trust, Carlyle Group, very esteemed names in this industry, and served in government after he got himself established in the financial industry, Undersecretary for Domestic Finance under George H.W. Bush, among other positions, a Fed governor since 2012. So certainly this is a man with a long history. Now, the question is, what will he mean for monetary policy? He is seen, as many say, Janet Yellen 2.0, that he'll continue her monetary policy path. So let's just look at some of the aspects that he has said in his speeches. Fed's close to its mandates, certainly on unemployment, on inflation. They're far away, though, Mr. Powell. But this is exactly the kind of thing Janet Yellen says. Policy is currently very accommodative. It's appropriate to gradually normalize rates, which means raise them slowly. And below target inflation means you don't have to go quickly. You can have a lot of patience. So how is this sitting with people? Ethan Harris is the chief U.S. economist over at Bank of America Merrill Lynch. He gives a big thumbs up to Jay Powell. He spoke to our own Matt Boesler from our Fed team here in New York, and he said he thinks that Jay Powell will be a very good choice, that he has exhibited sound judgment, will continue to do that as Fed chair. Chris Rupke over at Bank of Tokyo Mitsubishi, I think, has some doubts that a lot of people are going to express as we go through this process now of Senate confirmation and more. He says, look, the Fed chair since the 1980s has become like the nation's chief economist. And the question is now, could a non-economist, when it gets down to it, go before Congress? Let's say there's a little opposition. Can they go up and defend policy? And how would Powell perform in a crisis? This is a question as well. And again, Senate confirmation will come soon. I think Powell's expected to get through it. He's already been confirmed twice by the Senate Banking Committee because he's had to do that twice to be a Fed board governor. But there's some big questions here still.
All right, that's Kathleen Hayes of Bloomberg taking you through a little bit of information on who Jerome Powell is and what he's all about, his monetary policy stance. I like the way she said that the Fed chair has become a bit of a chief economist for the U.S. In India, I'm sure many chief economists would have also liked to be able to run monetary policy. But that said, here's some trivia. Okay, on what this big change at the Federal Reserve means. So this is going to be the 9th post-war leadership change at the Fed. Janet Yellen was the first woman to lead the U.S. Central Bank. And of course, as you already know, the U.S. is yet to see a woman president. If Yellen is not reappointed, which as we now know she will not be, she will be the first one to serve just one term since the year 1979. So ever since 1979, all Fed chairs have served 2 terms. Before Janet Yellen, it was Ben Bernanke. She's going to end at 1 term. Her term ends in February next year. The economy, you know where that is. Unemployment at 4.2%, 16-year low, 9th year of expansion. We already know that the U.S. is looking at what the FOMC calls solid growth. The other frontrunners were Gary Cohn, current top economic advisor to President Trump. Then there was Kevin Warsh, former Fed governor. Jerome Powell, as we've already discussed. And then there was also John Taylor, and it looked like for the last few days a neck-to-neck race between Jerome Powell and John Taylor. Now we know that it might most likely be Jerome Powell. I'm caveating it till we don't hear from the president. 64 years old, a lawyer by training, a former private equity executive, favors continuing gradual interest rate increases, sympathizes with the White House's call to reduce regulation. He's a Republican, appointed to the board by President Barack Obama. He's backed Yellen's gradual approach. He's earned a reputation as a non-ideological pragmatist. I can't find more neutral words than that. And he's been rated neutral on monetary policy by the Bloomberg Intelligence Fed Spectrometer. So yes, they have a spectrometer, okay, that rates where people stand on monetary policy, and Jerome Powell has been rated neutral. He's never dissented on the FOMC since he took office in 2012. He was already the overwhelming favorite on websites, betting websites, that is. He will be the first Fed chair since Volcker in 1980s without a PhD in economics. For those of you who watch, economic policy very, very closely, I'm sure that's a talking point. His 2016 financial disclosure lists assets of as much as $55 million. So he comes rich. And then, we can talk a little bit about Taylor, though he now doesn't seem to be in the running.
I think the two talking points on this are going to be the fact that, he's sort of, he's pro-reduction in regulation on banks.
Taylor or Powell?
Powell.
Yeah.
But
so is Taylor.
So is Taylor, but why do you need to move towards that? So I think that is sort of the debate there, right? I mean, Yellen had taken a fairly neutral stance, and I think there are enough people out there who debate that this is not the right time to unwind, crisis-era regulation on banks, and that perhaps is the only reason why Trump is leaning towards him, because otherwise there is no distinguishing factor between him and Janet Yellen. From a monetary policy standpoint, they are very, very similar.
Yeah.
And I think that
there is a distinguishing factor. Yellen is democratic.
I'm talking about the economics of them, not the politics.
But the politics of technically, everything, right?
But that's not exactly, which brings us to what Ishwar Prasad said. You should not have a very obvious and explicit political undertone to these appointments. Sure, there is always a political undertone, but there is a reason why Menaka did 2 terms. There is a reason why Alan Greenspan was sitting there across administrations, because if there is a problem with a Fed chief, yes, sure. If you think that they have underperformed in some way, sure. But that's exactly the question that Ishwar Prasad said. What did Yellen not do right? And actually,
how are you going to wish away the politics? President Trump has been Instagramming and saying,
I'm not wishing it away.
I find these people intelligent. And
he said that, right? He said that I want to make my mark. She's great, but you may want to make your mark. So that's the era that we live in. But for central bank purists, this is not the ideal situation. And there is still a possibility that Taylor comes in as the vice chair.
Stanley Fischer has stepped down, so there is the vice chair.
And the only reason I want to bring up Taylor is because there's that fabulous chart, which is so geekily fabulous, which we should
the Taylor
put up. Yes, the Taylor rule, which you should put up on the screen, and that of course suggests, and actually, jokes apart, that actually suggests a much higher Fed funds rate.
Yeah.
And if there is Taylor in the mix somewhere there, he will have to, even if he's vice chair, undoubtedly the first press conference he will be asked as to why he now supports rates which are much lower than what the Taylor rule suggests.
But academic life is almost always different from life in running a central bank.
So there is an there's an ideological difference that he will have to explain.
But Ira, think about it this way, right? Look at the conflicting indicators at play here. Republicans would have always preferred a higher rate, always preferred a faster withdrawal from the easing process, right?
Yeah.
I'm not saying at the risk of destabilizing the economy, but they would have preferred that. So maybe Taylor plays into that feelings. Powell is the guy who gives the markets that sense of, hey, look, nothing's going to change in a hurry. Powell is the guy, as you pointed out, who's in favor of deregulation. And let me correct myself. Taylor's not necessarily in favor of banking deregulation, but he definitely has expressed his support in favor of tax reform in a paper he wrote for Stanford, I think earlier in the year, where he said that the economy now needs, fiscal policy that's supportive of growth, and tax reform is the first thing on the plate, which we know has been item number 2 on President Trump's agenda. Item number 1 being, medical care, which he was not able to reform. So this, in fact, I think the chances are that we might hear from the U.S. Congress tonight itself on whether they will push through some of the elements of tax reform. So it could be a Powell-Taylor Fed.
It could be a Powell-Taylor Fed.
And then that'll make it really interesting to read. Really, really interesting. Well, anyways, that's as much as we can talk about central banking this morning. I'm sure you'll see markets play out in some fashion or the other, but worth noting that the U.S. markets were relatively unmoved by this, as were bonds in the U.S. and bonds across the world, reacting very, very marginally, if anything at all, to this news in any fashion. So that's the story of who the next Fed chair will be.
And most likely we'll hear about that tonight as well.